Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, y'all. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 16th of January, 2019, and we're just getting near 4 p.m. Central Standard Time. So let's talk about the markets for a little bit. A lot of news came out, and you can see as the market is still trading how the NASDAQ went from 67.37, it's near the lows of the day, down roughly 70 points as we're talking from that high, as the U.S. Department of Justice has decided to pursue the Chinese giant tech company Huawei over a case that took place in 2014 when T-Mobile sued in Seattle against them for stealing intellectual property. To me, the message is that the Trump administration is not making enough headway in their minds against the intellectual property issue or for it in the U.S. favor with China, and now they're letting loose some of the other guns. The message is going to be clear. Now, copper didn't break on that news, which I find interesting. Silver has stalled out, it hasn't gone anywhere. Gold's still getting a bid, and the gold market's looking at, be it Brexit, it's looking at this event, and it's holding on very well as it's looking into all that. It's going to be a pretty interesting couple of days here. When we look at gold for the week, the market is up a couple of dollars, 4 to be specific right now. When we take a look at current price action, I put on the resistance line and the support line for you to see at this point, and I think that that's somewhat valid. It almost looks like a bugle, doesn't it? You know, but I'd be the cheerleader facing this way, you know, and when you got that and you're yelling out there. Which way is the market going to break out? Remember, is this line, if it's valid, what happens is prices hit it, they back off into it. As they fell down, they found support and they backed off the other way. We'll see which way it breaks out at this point. When I go to the swing lines, I have a pattern of lower highs, lower lows, which is not bullish. Get over 1296.60 and you negate that pattern. More of what's going on is this consolidation I've been talking about, and you see it there. And as you can see, the 18-day average of closes, which I call the line in the sand, is rushing up to find that consolidation. I think that's important as well. Resistance dropping suddenly. So the Bollinger Band top, and remember, a Bollinger Band is an algorithm that is designed to keep the market trading within it 95% of the time. Think of it this way. When a market's gone sideways, if it rallies, that's a resistance point. When the market's going sideways, if it was happening under the 18-day average, that becomes a support point, the first challenge of it. It is very different than when the market went up for this challenge, then came back and launched itself. And you could see the whole band turned away from sideways here and started pointing up. You're back in that consolidation phase as far as the price action is concerned right now. In terms of momentum, you lost the bullish momentum. Now, when you lose an embedded slow stochastic, often prices and the 18-day average come together. Take a look at the Japanese yen in my financial video. You'll understand because I've been talking about it there over and over. And this is not a trade call, it's a momentum call. When you lose bullish momentum to get it neutral, and that's all. It doesn't have to get to this 18-day average, but ideally it does. I use the word ideally. And then it's like it clicks off everything and it starts doing whatever it's going to do again. The gold ETF argues that that's not going to happen. You heard what I just said. Why? Here we have a market that had an outside day down yesterday. It has kept its embedded reading, different than what the futures have done. And today you took out the high of an outside day down. My theory, and it's mine, my theory, is that when that happens, you've sprung a bear trap. And as a bear trap, I look to see what's the closest number above the market here, and it's the upper Bollinger Band. So unless the lows of Tuesday are taken out, odds favor with the embedded reading that the market caught a group of people here and it's going to try to lift itself. I only talk the percentages. That's what I look for. GDX is different. The miners have lower highs, lower lows. It broke its up. It actually went into a downtrend, has not hit its target, which could be the lower Bollinger Band, and it's oversold. It may never hit that target. Oversold is always something I look at. Has the market spent its momentum? Resistance back at the 18-day average. It is in a downtrend. The bias is down, but it is oversold. The gold-silver ratio, as I told you, I was looking for these numbers to come up a little bit when you started this pattern of making, and you can almost see it here just on what the market's doing on a closing basis. It's making the higher lows, higher highs. I'm looking for the resistance up there, which means silver is weaker than gold. You need more ounces of silver to buy an ounce of gold. And gold was up $4 or $5 today. Silver's unchanged. And you can see how it's working its way down. What else in the silver? It lost its embedded slow stochastic reading right there. Again, I look for when that occurs, price and the 18-day average to come together. I'm still looking for that to happen. Don't know if I'll be right, but it comes in probably in the 1550 area. In the copper market, you woke up to a market, it actually went, when the market ended yesterday, still in the bear camp, but the market had a good, strong close at yesterday. And what happened overnight is the Chinese came in and injected near 90 billion into their banking system. I'm just making it simple for you. Well, that's a sign that they'll do whatever they're going to do. They announced yesterday plans, more plans for infrastructure. So the market took that. It jumped finally overnight, took out the high here. Are you trending? No. You have a lower low, higher high, a battleground at that line in the sand. The momentum of this market has been coming up and the bias is up. Let's assume the market gathers more steam. Maybe it gets to the 271.15. Let's assume that this news about that Chinese corporation Huawei weighs on the market. Wouldn't surprise me if you're back to the 18-day average. The important thing is you're out of the trend. You're just waffling right now. In the platinum market, we had been down 2 days under the lower Bollinger Band. We had talked yesterday. If you can follow through, you get down here, but where's the resistance? And I said, back at the 18-day average of closes. Now the market's right there. Guess where the power is in this market? Ready? Palladium, new all-time high again, up $41. And again, you've got to understand the U.S. and Russia, be it the missile treaty that's over, and now we're starting to do different deployment of things, all the problems quietly. Who's the supplier of palladium? South Africa and Russia are the big suppliers. This market's been running on this news and keeping that going. I have not missed a beat with that. I know that in talking here. Then we get to the dollar index. Where's the battleground? Right here, the market, you can see oversold, fighting at the 100-day average, goes up yesterday, hits the 100-day average. You know, so often I say that markets, when they get away from a Bollinger Band, to regroup if that's what they decide to do, and markets are always different, but if they regroup, often against the 18-day average, and that's exactly what I'm seeing. So what do we have in the way of a trend? Do we have a trend? Well, the 18-day average is 95.72.5. I don't know what the settlement is yet. If it closed over that number, you would have higher lows, higher highs, momentum up, and then bias up. If you close under that 18-day average, the bias is down, but the swing line is up, and so is momentum. That's your battleground. Let's assume you launch out of here. Potential could be the upper Bollinger Band. Let's assume the market fails. The 100-day average becomes the near-term support. I wouldn't be surprised if you're just whipping right here back and forth. One of the things that I teach, I know a lot of traders like to look at momentum. They like to look at in and out trading. Some people don't even want to go home with positions overnight. One of my favorite tools has been pivot points. And no, I didn't let it go unnoticed because I created videos for you on it, which teaches you my secrets, how to use momentum with them. Because on their own, without momentum, it's like I'm trading with my hand behind my back. Put momentum with it, you get a better idea of them. What are they? How do you work with them? I'm not going to explain it here. I've got 2 videos that do it. So if you'd like to learn about this intraday tool, and that's what I call it, give us a call. You can go to our website, sign up for it. You might want to look at the Arun indicator as well. And you can click up here. It'll take you to our front page of our website. You can do it there too. I'm Ira Epstein. You have a good day. Talk to you tomorrow.